Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. Roll time. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you get it back. Yeah, but we all think you're crazy. You don't fight this. No way. But the markets are freaking out and you don't think that anything is wrong. Put it back tomorrow and I'll lose it all. Should be fun.
Good morning. Oh, guys, you know what? I didn't even turn the camera on. I will fix that later. Okay. All right. Well, let's go to the charts, man. We've got non-farms payroll today, but let's look at what happened yesterday. S&P 500 taking a huge bender down into the close of the month and the quarter, and I'm sure that a lot of that was just rebalancing, and that's why the move was so drastic. Excuse me, so drastic, but wouldn't completely ignore it. It does kind of look to me, especially when you come out here on like the daily chart, that looks like a reversal to me. I don't know about you, but that kind of looks like a reversal to me. I come over into the treasuries, you can see when the treasuries reopened for the extended session, the shorts piled on almost right away, and they are considerably lower now here this morning. Meanwhile, over in oil is feeling the squeeze a little bit. I mean, they might bust new lows here, but I think in longer term they're probably going to bounce back up. Right? Natural gas just taking a big spike over concerns, at least this is natural gas in the US, over concerns that Putin is going to require all payments to be made in rubles, and Europe says that they're not going to do that. So they're going to have to get their natural gas from somewhere. And then we got silver and gold, which continue to trade pretty lackluster, as actually the whole metals complex there. Okay, oh man, I'm that late. Here we got the non-farms is coming through, and we've got, come on. Why are you not giving me the number? Okay, private payrolls, actual 426, forecast 495. Unemployment rate 3.6, forecast 3.7. So slightly better than expected. Okay, so non-farm payrolls 431 versus median forecast of 490. Not very good, but not terrible. I personally don't. So I'm not looking to take a trade here this morning. Just to warn you. Oh my gosh, like everything's messed up here this morning, guys. I apologize. I am just no good. No good. There we go. All right, and then we've got to fix the camera. There we go. I forgot to plug it in. I was taking pictures of it yesterday for the video they were going to be putting out on Monday, and didn't plug it in. All right, deactivate, activate. Well, we're getting a lot of volatility off of it just because, you know, like it's non-farms, but I really don't see anything in that has to be like a big deal. There we go. Oh, and we need to turn the lights on too. That might help. Man, I didn't realize I was that late. Oh, this light is was also using that light to take pictures. There we go. There we go. The scene doesn't look as good there with that big ol' blue thing there. Maybe I should have gotten a different color. Anyways. Alright, let's see here. Which charting software are you using? I am using NinjaTrader for my charting software. Alright, so I do not plan on taking many big trades today. I am gonna be going on vacation today. I will not be here next week. This is not an April Fool's Day joke. I've been telling you guys all week because I didn't want you to think it was an April Fool's Day joke. I am not going to be streaming next week. And the last thing that I want to do is enter into the vacation sour because I took a bad trade, right? We've had an amazing week. Okay. Like we made like 80, 90 bucks or something like that. Okay. It was good. So let's not ruin it. I may still take a small trade, but it is going to be a small trade. And look here, you can see, so I do have the micros rolled over. I'm not getting any, nobody's putting anything out in the 30-year yet. Well, that's interesting. You can see how inverted the 5 is. Man, it's actually, the 2 is quite inverted too. 2.45 versus 2.4? Is that real? Is that really the... Oh, man. And they're flattening even more off of this. Well, the 5 and the 30 is. I wonder why I'm not getting anything in the 30 here, though. I'm going to just try... the yield curve is going even more negative after this data. This is something. Like, here's the thing is I'm not convinced that the yield curve inverting on its own is really a very good predictor, or at least in this instance of like a recession. I think that the reason it's inverting is because we're expected to have to fight inflation this year, but not next year, 2 years from now, right? That's really what it comes down to, is that the market still believes that the inflation that we're seeing is quote unquote transitory, right? I think that's the main reason that you're seeing the curve invert. But I think that a better indication of a recession would be, how far of a move. You know what I mean? Like normally, we get the curve. It's like it's really steep, and then over time it gets flat, right? And then this is like inverted or whatever, right? And now it's down over here. So if we've just had something where it only got a little bit steep, right? And then we're flat right here, right? The degree of the move here is not very much, which I think means that for it to be a reliable indication, you're going to have to see the yield curve invert considerably, right? And that appears to be the line that the Federal Reserve themselves are taking, right? They're saying that they don't think that the yield curve is, signaling that there's going to be a recession. Or to put it more, to be more specific, the Federal Reserve is not saying we need to hold back on interest rate increases because the yield curve is inverting, right? But there's this other thing, which is, does the yield curve create recessions? If you're because banks don't make, it's bad for banks when the curve is inverted, essentially. It's not good for the banks. So they might hold back on lending. So what we're going to want to pay attention to here, here's the edge for you guys, all right? If the yield curve, the efficacy of the yield curve as a predictor of a recession is in serious question. But the thing that we would want to see that would be a really good reinforcement that it's really turning south would be banks pulling back on lending activity. I don't know what indicators and pieces of information that we're gonna need to look at to see that. But we would be concerned if we saw bank lending activities pull back because of the inverted curve, right? Because they don't make as much money when the curve is inverted. So that would if that started to happen, that would be the key proof that inverted yield curve actually creates recessions, which would be interesting. Because then it would turn into the Federal Reserve would have to adjust policy based on how close the curve was to inverting, huh? Hmm. You should not get on that. Why does everybody keep saying that? I don't. I have to say, I really feel that the public's view of the Federal Reserve gets very, very distorted. I think that it's very easy to fall into, um, like what do we call these things? Confirmation biases and so forth when it comes to the Federal Reserve. Because if you don't like the Federal Reserve, then no matter what's happening, you're gonna think of a reason about why what they're doing is bad for the economy, and then you always are just gonna dislike what they're doing. Anyways, but if that changed, then the Federal Reserve would really change their policy framework, right? They would start listing yield curve inversion as a factor in their decision making process, right? Okay, so what I'm seeing here today so far, the Treasury is pushed down to their lows of the session. They're bouncing around on the lows, particularly in the 5 year. We've developed quite a bit of a range and a liquidity hole somewhere around 122 even, which is where we spent most of yesterday. So the degree of this move is not too significant. I don't see anything in the numbers. I don't know. Let's just come back here. I'm gonna hammer on that yield curve thing more and more because like literally every day this week, one of the top stories on CNBC was about the yield curve. Like everybody's reading this yield curve thing, and I've never seen such an esoteric niche thing. Like I part of the reason why the whole yield curve inverting thing was like such a good indicator was because it was something that like not very many people think about or look at because only the interest rate traders are really caring about that sort of stuff until it became like an indication of a recession, right? And now that like everybody's watching it, I really have to question like now that everybody's watching it, that's going to be exactly the moment that it starts to fail, right? But I don't think that it's going to fail. I just think that it's way, way, way more nuanced than the media makes it out to be. You know? Well, try going back. It doesn't matter what the past history of it is. Remember, past performance is not indicative of future results. And in this instance, we have a very, very, very good reason to believe that the performance of this thing will not be the same. Why? Because the cost of carry has been so low, the yield term premium has been so low that the curve was never very steep to begin with. So all you have to do is sneeze and the yield curve inverts, right? This line that you're going to continue to see from people in the media that the yield curve inverting is the market predicting a recession is complete bunk. I'm just straight up saying it. It is not the market predicting a recession, okay? They're doing the primary reason for the inversion here or at least the flattening. Let's not call it inversion. Let's just say the flattening. The primary reason for the flattening is because the bond market believes that inflation is transitory. They don't think that the Federal Reserve is going to be fighting inflation 3 years from now, right? That's all. And I don't think it has anything really to do with them predicting a recession. And that it's inverted, considering how flat the curve was to begin with, the inversion in and of itself is not all that important, unless the theory that yield curve inversion creates recession is true, which we don't know yet. But this situation would be a really great way to prove it, wouldn't it? Right? If all of a sudden, next 2 quarters, banks pull back on lending activity, right? And then we go into a recession. Perfect example. But we need to look at like this non-farms payroll. Okay. So again, 431 versus 492. Okay. So it was not as good as expected, but you notice that the treasury sold anyways, right? So even though the report was bad, it was not bad enough to change the trajectory of the interest rate hikes. And in particular, the unemployment rate fell by 1%. So, and a lot of the time they've been following the unemployment rate. Average hourly earnings was in line, right? By the way, remember, this isn't the only data that we have. We have PMIs today, too. Those PMIs are probably going to be important as well. Okay. They think that the Fed is going to do a double hike. Still, I think. Is this a good time to go long in stocks? Well, I don't know about that one. I don't know. I mean, if we come back to a chart here, like let's just kind of think about that for a little bit, right? Well, when we were down in here, that sure was a great time to buy stocks, wasn't it? I actually did buy a little bit of stuff down there. I'm pretty happy. I'm pretty happy with it. This is great. But I think the whole thing that everybody's been saying is like, this is crazy. It is crazy. It is pretty crazy. But I mean, this was crazy. This was crazy. This was kind of crazy too, to be frank. Right? It's just the way it goes. And I do think that some of this was maybe being pushed by gamma. So I think what you're likely to see is market overreacts. Here, let me give us some room over here. Right. Probably what you can see is market overreacted. We're going to come through. Probably we'll go through this little cluster of stuff right here. Right. And if so that much I think you could probably game out. You could just see them bounce off of the moving average today. That's entirely possible that it. So one scenario is kind of goes flat a little bit and then it goes up. One scenario is it goes down and then it goes up, right? And then another scenario would be that it does that and then it starts pushing lower. If we're like we're going to go into a recession within the next 2 periods or next 2 quarters, that's what you would start to see, right? Is this and then well below this. This, I'm not saying this scenario is not going to happen. I think that the probability of this scenario is maybe like 40%. They were saying 35%. I actually think with the way that the Ukraine war is going and everything, this is probably more like 40% right now. So on these ones, let's say that this one's 30 and this one's 30. Just guesstimating. But so from that perspective, is today a great day to buy stocks? Not necessarily. If I was going to buy something today, I would want to be sure that I was getting a good price, right? Facing World's soundtrack so good. Why are you bringing that up? Do you know that I'm a super Unreal Tournament nerd? Is that why you're bringing that up? Wow, that was a big block trade. 5,000 block trade at 114.23. 114.23. I don't know what that actually ends up being. That's a little bit above where we are right now, isn't it? I should go back and try. I was trying to remix that song, and I was having trouble figuring certain things out and everything. But now I actually have like I found the tool that they use to play it, so that I can rip all of the samples out and completely reproduce it, and then like hardcore remix it. Yeah. Oh, you found your CDs. I kind of miss playing it. I kind of wonder though. Last time I was playing, oh, what was it that I was playing? I was playing something that was fairly high paced, and I was kind of feeling a little dizzy. I was it like I get old and I can't do it anymore? I don't know. I can play Minecraft. It's fine. Okay, treasury's coming back up here. I'm still not get. Oh, you know what? I have it wrong in here. Oh, I have it wrong in here. It's trying to do the. Okay, let's try this one more time. 30:04:22. Ah, much better. Much better. Jeez. So the spread between the 10 and the 30 is only 5 basis points. The 2-year being that much higher than the 10 is super bizarre to me. Like super bizarre. So here's a question. Do you think it is possible to see an inversion in the 2 and 5? Like what if the yield curve was this? Of course, the bills are going to be down here, right? What if the bills are down here? But what if it ended up being here's the 2, and then here's like the 5, the 10, and the 30? What if it was like that? Has that ever happened before? Has that ever happened before? Do you think Will Smith overreacted? Oh, I'm not going to say overreacted, but I think that an outburst of a violence in a public place is never appropriate. There's new lows. Jeez. It looked like they were kind of recovering, and then they just like blew through it down on the bottom side. Well, I'm not hearing anything from my news squawk or anything, so. And again, these are kind of like yesterday's prices, right? Actually, what is it exactly? No, I thought 122 was like yesterday. Maybe it was from 2 days ago. 2 days ago's prices. I wonder, one of the things that you might see is you might just see a really strong move just because they want to trade, you know? I think that if they're not overreacting to Ukraine news, then the headlines are all going to be about the yield curve, right? And so you might continue to see these days where like yields get pushed down aggressively for no apparent reason and stocks puke. We could be going back into that kind of action. The 30-year didn't push new lows, although its sisters did. So now I want to go back and look. Has the yield curve ever been more flat than that? Be under here under finance. Dynamic yield curve. This I don't know why sometimes it's hard to find this, but this tool is so cool. This tool is so cool. Okay, so there is a pretty flat yield curve. It's not the whole curve inverted, but pretty flat. The 10 is down a little bit more than the 20. Well, that may actually be enough to say, because they didn't have as many 20s before, right? Back then, did they even do a 20-year? I don't think that they actually auctioned a 20-year. I think that the 20, what you were getting from the 20 was just 30s that have been around for 10 years, So yesterday GameStop took a 20% jump on reports that they were going to do a stock split. So I believe that initial move was probably just them raising the price, because everybody knows that you get more interest in a stock when it splits right now. I think that there's probably going to be a time where there's going to be a split and then it goes really terribly. But I don't know if that's today. I saw this thing the other day where Gary Norton was saying that he can remember at the .com bubble that doing a stock split was a big deal too. And then one day it wasn't, and that was basically the top. So yeah, that's one to keep an eye on. But for today, yeah, I think you're gonna see some puking in the in GameStop, right? Because once they get over 200, that means that options are in the money. So you could see some crazy short squeeze behavior today. Let's see here. Let me pull it up here for us. GameStop Corporation. You know what? Actually, the overnight doesn't look like too crazy, but yeah. Oh, I guess you can't. I guess it's not going to show up. Remember, 200 is in the money sort of a thing, right? So you might see it try and make a push over 200, and then, well, how big of a jump is that though? That's about 5%. So I wouldn't like to see it 200 immediately, because I wouldn't like to see it halted. But if they can get to 200 and then just kind of keep it steady, yeah, that could squeeze really hard. That could squeeze really, really hard. Anyways, so here on this yield curve, so that is probably an example of, yes, that the whole curve can be inverted. See, this right here is more like what I expect, where it can be inverted, but the 20 and the 30 still kind of ends up being a little bit higher most of the time. That's interesting. Now it's been so flat that you know what else is interesting is you watch this. Okay, it's kind of moving. Here's the curve. It's steepening, and now it's flat. Or sorry, it's flattening here. Now it's pretty flat, and now it's going to steepen back out as the short-term yields, and then the whole curve came down. Whole curve comes down later as we enter into quantitative easing. Yeah, and then here comes, it was pretty flat, and everybody was freaking out that there was going to be a recession when it was pretty flat over here. And then COVID hit, so now the yields go even further. And now watch how quickly that is just all of a sudden one day, oh, by the way, we're inverted now. Just like that. That 10-year is still pushing, man. That looks like an ugly trend. This is not the highest yield for the year. We were above 2.5 at one point, right? End of year forecast is still 2.6. So I don't know. The liquidity in some of these, look at the 30. The liquidity in the 30 is just ridiculous. There's this guy in Discord that he said something that it would be really innocuous. That's really I'm not going to give away the trade cap. He said something that's very innocuous, but kind of triggers me. I was like super suspicious about him. But then he's like, we had a conversation and he's been saying like a bunch of interesting things. So I need to give him permissions. I'm not going to plan. The liquidity is still pretty weak. I mean, 1500s is better than thousands, but you know, it's kind of weak. You're likely to see pretty decent 6 to 8, maybe even 10 or 12 tick pullbacks on all of this. I must say, though, the decline that we're seeing here is pretty aggressive. We've seen about 12,000 contracts net short come in here, which again, well, let's come out to zero hedge and see if they kind of saw something in the numbers that maybe I didn't, right? Unemployment rate tumbles, earnings jump. Oh, okay. I don't know. Their reading of the numbers here just seems a little. In our NFP preview, we said that only a catastrophic March jobs report coupled with even more negative data could shake the Fed's determination to pursue a 50 basis point rate hike in May, which is why despite a modest miss in the just reported March jobs data, we failed to see anything remotely ugly enough to change the picture, which sees the Fed continuing its liftoff as planned with a 50 basis point hike next month. And then they just go through all the numbers. While there was some weakness at the headline jobs level, the market will gloss over this and instead focus on yet another month of red-hot wage growth. Average hourly earnings for all employees on private non-farm payrolls rose by 13 cents. Over the last 12 months, the average hourly earnings have increased 5.6%. In March, average hourly earnings of private sector production and non-supervisory roles rose by 11 cents. One reason for the strength, however, was purely statistical. The average work week for all employees on private payrolls fell by 0.1 hour. Okay. The unemployment rate declined by 0.2 percentage point to 3.68% in March, and the number of unemployed persons decreased by 318 to 6 million. Blah, 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 blah. Among the major worker groups, the unemployment rate for adult women declined in March. Jobless rate for adult men, teenagers, whites, blacks, Asians, and Hispanics showed little change over the month, and unemployment for this group is now below pre-COVID levels. The underemployment rate for young adults aged 16 to 24 in March is 12.9%, according to Bloomberg calculations of the Bureau of Labor Statistics data. Total unemployed aged 16 to 24. Marginally attached workers. Yeah, okay. So, we've seen big trades continue to position over a wide range. Yeah. Well, I mean, it was a pretty excessive 12,000 contracts net is a lot, right? Of course, on a day like today, it wouldn't surprise me to see like a 30,000 change, right? So, but is that actually what's going to happen? Because I kind of feel like that this is mostly just traders going to trade and they could easily rebound here. And we do kind of have to watch what's going to happen here. S&P 500 has been down since the news. We'll see. Now is kind of a period where some equity traders come in and you often see a little bit of a change, but okay, so they have another story here. Despite a disappointing increase in payrolls, the drop in the unemployment rate coupled with the rise in average earnings has prompted stocks to trim gains ahead of the open. Okay, but the rise in earnings was in line. It was 0.4 versus 0.4. Well, okay, it was like 0.1, but all of the other months before that, it's kind of been 0.4. So I don't see why that would be all that significant. Whatever. Set the curve, the 2s and 10s into inversion. Well, just the spot curves that you see here, it is inverted. It is very much inverted. we're at 2.48 versus 2.44 over here. So we're inverted by about 4 basis points. Okay, but nothing all too much. So I still kind of feel that this news that the non-farms doesn't change too much. You might see a lot of movement that is just kind of like trading. Now I'm wondering if after I'm done with the stream, since I'm going to be gone for a week, I should probably like shave. You're newbie, live in Europe. What news source should I use for the future indexes? Any news source? Well, okay, so I have a video on the channel you can go and find called Trading the News, or it's like the ultimate guide to trading the news. And in there, I have a little bit of information about that. One thing is that I would use TweetDeck. You go to tweetdeck.twitter.com, and there are a bunch of news squawks and reporters and stuff like that. You can get a lot of good breaking news off of TweetDeck. Okay. Now I really think you want to have a news squawk. So I use Financial Juice for my news squawk. It's like $70 a month, I think now. Maybe it's $100 a month. I can't remember. It's a lot cheaper than the alternatives, though. I mean, I know that's a lot, but it's a lot cheaper than the alternative. And, that's how I get like the breaking economic numbers and everything else that comes through. Then you can also have like a larger news subscription. So I have a subscription to Bloomberg. I'm not sure how happy I am about it. I don't really feel like I get my money's worth from Bloomberg, unfortunately. Like just from like a news entertainment perspective, I don't know if I get enough. I don't know if I make enough from that the website, the digital subscription, to really justify paying it. I also tried the zero hedge $30 a month one, and I didn't feel like that one was really worth it either. Maybe the $100 a month one would be, though, because they give you like access to all of this Wall Street analysis stuff. So that one would maybe be more worth it. But yeah, I haven't really found like a news service subscription that I felt was like super great. But yeah, anyways. And then kind of keeping an eye on the E-mini here. They're kind of they're run into an area around 45.37 where I would expect to maybe see some repositioning or possibly a bounce. This is funny on Twitter. There was this person tweeting about the new multipolar world, and it had a picture of all of these presidents that have kind of been relatively or favorable to Russia, I guess. And he says, reminder that anyone that claims a multipolar world is naive or deceptive. There is no multipolar world. Russia can't even take over a neighbor, has no real military, and China is sitting there shocked that its main partner is a weak fraud and people want to throw around nonsense. That's funny. Yeah. So check that out. Reading the news, I think, is a really important part of trading, and I especially like knowing what the major Wall Street analysts are saying about things. Like, really helps. Okay, like it really helps for me to know that Goldman Sachs thinks that the 10-year yield will be 2.6 at year end. right? That gives you a really good idea of like how big of a move is a big move, you know? How aggressive are we pricing right now? Excuse me. Let's see here. Feds Evans says he expects 7 hikes this year and 3 next year. Oh, wait, how would you do that? And 1 in May, June, August. Wait, let's come back here. Federal Reserve FOMC calendar. Okay, so March, May, June, July, September, November, and December. Oh, okay. So Evans thinks that they're just he probably is saying they're going to do a quarter basis point hike every meeting, essentially. Every meeting, and then that would be 7. And that would be perfectly fine. Because then that would put us at, so this is, what is this? The March one was to a quarter to a half, right? So let's say a half. So this would be 7.5, 1, 1.25, 1.5, 1.75, 2. Okay. Trading economics is a good place for economic data. Yeah. So let's just talk about calendars, shall we? Oh, actually, this is a different website. I've never seen this one before. They've got an okay calendar, though. I really think a Forex factory calendar is the best calendar. I'll tell you why I think the Forex factory calendar is the best calendar. Because on the Forex factory calendar, you got this little button here that says detail. And then it tells you what that is. A level of a diffusion index based on surveyed purchasing managers in the manufacturing industry. That's at 10 o'clock Eastern time, right? And then I can go and I can read the last release and see like what is in it. Okay. So which report was it? ISM manufacturing PMI view report. I'll accept the cookies, agree. Okay, here you go. And then you can like read the report and you can see like what it comes in. So what respondents are saying, manufacturing at a glance, and here are the different things. And like I would go through and like read this one to get an idea of like what's in the report. So what can we grab off of this one is that there is a lot of qualitative information in this report. So this could be one that when it comes out, there's going to be like the headline number, but then there could also be further moves as people dig into the report and read the respondent comments and things like that, right? The economics calendar has that one too. Okay, so I'm having a hard time. Okay, so here's so let's go to the one. Okay. ISM. New orders March. I can click on that. Oh, there you go. And it tells you. Does it link you to the report? Yeah, I don't know. It's okay. I also think that the look of this one in Forex Factory is nice and clean. I can come in and I can see the chart of it in the past and all that sort of stuff. So I really like this one. I think that there's one, I get one from Bloomberg too, right? But like the one that I get from Bloomberg, I don't. I never found that to be super great. Let's see if I can find it. There's a calendar, right? Economics calendar somewhere. Somewhere maybe. Home markets. Economic calendar. There it is. Under data. Oh, wait, what? Well, Bloomberg, you just failed on live stream right there, right? I go to use your economic calendar and I get nothing. I get nothing. Markets, economic calendar. Nada. Boo. That sucks. Yeah. Anyways, there's like a bunch of them. But then there's like my financial juice one. So the financial juice one is like, it doesn't tell me a whole lot about the numbers or anything like that, but I can come in and I can put like these alerts on it. So I can come in and I can say, okay, if it is above, then I want, if it's more than this, then I want a buy alert. And if it's below this, then I want a sell alert. And then if I have the tab open, when the news comes out, it will make a sound so that I know which way to click. So that's cool, right? That's also like this thing where it's like need to know market risks. This is like really good stuff. UK agrees to join the US in strategic oil reserves release. Okay, that's interesting. The Kremlin claims that Putin's decision to make gas payments in rubles is irreversible. That's important, right? Foreign Minister Lavrov, Russia has seen much more understanding of the situation in Crimea and Donbass from the Russian side. Russia is preparing a response to Ukraine's proposals and that there is progress. Da-da-da, right. And then you kind of got like a feed of the stuff that's happened. But anyways, it's not bad. Not bad. Close the Forex Factory thing there. We'll keep that open so that we can see what GameStop does on the open here in 15 minutes, right? Because there could be a crazy squeeze on the way, right? Well, on the treasuries here, I do see the latest swing on the zigzag is a higher high, or sorry, a higher low. And the S&P 500 has turned around and has maybe recovered about half of the losses that it had. It's also a pretty significant move in terms of cumulative delta. You see that little line right there? So that is interesting. Maybe you buy this. Maybe they want to buy this. I don't know. Whoa, is this news story for real? Wait, let me read this before I read this headline out to you guys. I'm not, this is a little political. It's not really related to trading, but I think you guys will still be interested. Okay. Hello, NASDAQ killer. How are you doing? Think that Bloomberg uses the Okanaday one? Could be. I think that this headline that I was just reading was maybe exaggerated a little bit. I tell you what it was about is that the Justice Department sent out a letter to the state attorney generals talking about discrimination against transgender children. I'll quote from the letter. Intentionally erecting discriminatory barriers to prevent individuals from receiving gender-affirming care implicates a number of federal legal guarantees. State laws and policies that prevent parents or guardians from following the advice of a healthcare professional regarding what may be medically necessary or otherwise appropriate care for transgender minors may infringe on rights protected by both the Equal Protection and Due Process clauses of the 14th Amendment. That's super interesting the way that they put that. The Equal Protection Clause requires the heightened scrutiny of laws that discriminate on the basis of sex and prohibits such discrimination absent an exceedingly persuasive justification. Yeah, except for that, I think that the state attorney generals would say that they have an exceedingly persuasive justification. Because the government cannot discriminate against a person for being transgender without discriminating against that individual based on sex, state laws or policies that discriminate against transgender people must be substantially related to a sufficiently important governmental interest. You know what that means? This is going to go to the Supreme Court, right? That's what that means. A state is going to come out, and some of these states already have laws that you can't do gender transition process on children. And so somebody is going to, or not somebody, a state is going to enforce that law. The Department of Justice has already warned them and will sue them, and it will go to the Supreme Court. And because it would be suing the Department of Justice, suing a state directly, it would go straight to the Supreme Court, right? So what that means is that before the end of Joe Biden's term, there will be a Supreme Court case about kids doing gender surgery. I'm not trying to take a position on whether that's good or bad or anything like that. I think you guys probably can guess what my opinion on that is, but that is going to go to the Supreme Court. That's super interesting to me. Anyways. Geez, Bitfinex top tweets. It appears that the next wave of blockchain fraud is going to be people copying Tether. Fascinating, right? Dude, that is exactly what I'm seeing happening. It's a little scary. No, I don't think. Come on, you're trolling me. I'm not going to. I'm not falling for it, Salim. I know what you're trying to do there. I know what you're trying to do. We don't have to get into it. We don't have to get into it other than that it will be a Supreme Court issue and that it will be something in the news that we can talk about that without having to go into what our opinion on the law is. Anyways, I think that Bitfinex might be onto something here. I am seeing other people try to do stable coins. And if everybody all of a sudden starts creating stable coins and just printing dollars out of thin air like Tether does, that's going to force the US government to do something about it. I say, good. Maybe it will force... Maybe it will force regulators to finally do something about it. I'm a tweet it. that was pretty controversial for me to say, I think. Imagine every alt token says we'll buy 10 billion Bitcoin as reserves with free money we got from our made up market cap that was propped up by money flow from Bitcoin in the first place. It's like if FTX were to increase leverage limits from 10x to 100x. Is it bullish? Question mark. I must be too old. Technically, it is bullish though, because that means more buyers of that thing, right? It's just, I don't know what this means for the rest of us. YouTube is already throttling your conservatism in trading. Well, look, okay, so two things. One, I think it's really interesting that the left is deciding that transgender reassignment surgery in tweens is the hill they want to die on. Like this Florida law, like them getting so upset about that Florida law passing and stuff is, like, to me, like, really wild, politically speaking. And Disney going all in on it, on arguing against that bill and everything too, is, like, really wild, politically speaking. And I kind of have to wonder, like, what that is going to do for Disney, right? That could be relevant in the markets. I've already seen, so Ben Shapiro, his company is the Daily Wire, and apparently the Daily Wire is going to start making children's programming so that you can have something that's not Disney. Because I kind of wonder, dude, like, so what was it? We've been watching Muppet Babies. That's on Disney Plus, right? This is about the only, like, really baby show on Disney Plus, actually. And, like, I'm watching some of the shows, and I'm kind of sitting here like, Okay, so, like, there was an episode the other day, okay? And the episode was Gonzo has a new friend. It's Baby Gonzo, right? Baby Gonzo has a new friend that he wants to introduce to the other Muppets. And his new friend, here's the thing though, his new friend is a potato. His new friend is a potato. So the other Muppets, they kind of make fun of him for having a potato as a friend, but then and that makes Gonzo really sad. And so the other Muppets feel bad and decide to accept Gonzo's new potato friend. That's the story. And I'm kind of sitting here like, maybe humans have a tendency to mock you and try and enforce conformity, because to some extent it was a survival mechanism. If you come out and you start doing something stupid, the other people are able to convince you that it's stupid so that you don't do that thing and put the whole group at risk for, whatever kind of bad consequences could come from your stupid behavior. Does it get out of line? Absolutely. And so we should totally have in our kids' stories these stories about being able to be kind and accepting to people. But I also think that we need to have stories where somebody wants to do something stupid and all of their friends and family who love them say that this is dumb. And then they realize, oh, you know what? My friends and family, they do actually care about me and they're right. This thing is dumb and I shouldn't do it. Maybe that should be a story too. That's what I'm thinking, right? And is that like grooming children for something? I don't know. I can see the stories. The other one was that stupid panda movie. That don't watch that. That movie was so dumb. I did not like that movie. And it was again, I felt like that movie tried to teach a lesson that was like really better to be a discussion between kids and parents about like how important is it to respect your family and do well in school versus like being your own person and stuff, and how do you balance those things? That's like a discussion between parents and kids, not like for a movie. Okay, so is Disney grooming people? I don't know. Okay, but here's the other side of this. Okay, so like when I look on the social justice side of things, I see a lot of crazy things happening. Okay, but when I look on the economic side, I always feel like I am sandwiched between two crazies. It's like on one side, you've got this group of people that think that capitalism is evil and that the thing we need to do to bring an equitable society is to tax the hell out of anybody that's ever been successful. And then finally we will have balance in this economy, which is just so ridiculously dumb. Like, dude, if there's an imbalance in the economy and these guys are making too much money, why are you just going to let them continue to do that thing and then just get it back as taxes? Like, oh yeah, give it to their buddies over in DC. Surely it will get to you and it will be applied correctly. Come freaking on, right? But then on the other side, we got these retards that think that the market is perfectly efficient and that whatever the market does, that's the correct thing and that we should just let the market do whatever it wants. They're ridiculous. Sorry, guys, on that ZF trade, I took a stop out. Jeez. That was a pretty ugly move there, wasn't it? I mean, that was on the open, right? So that might have just been people selling the treasuries on the open for the S&P 500, but there's a pretty extreme moves, though. Life is a game that demands losers' equity is a farce. I think that the amount of equity in a society is a poor metric. Yeah. I think that what we really care about is the standard of living for the people at the lowest rung, and how big those rungs are and everything. I think that the left is on to have something generally right. Like the problem that I see on the left in terms of economics is that they kind of see where the problems are, but what they want to do about the problems is always insane. It's like, okay, they can see that millionaires are able to avoid being taxed because they keep most of their assets in the market, and then they just borrow against their assets. And so they're able to still use the money without selling it, because if you sell it, you get taxed. But if you take out debt, you don't get taxed on debt. Right? And so what do you do about that? Well, the Republican take on it would be you would want to incentivize risk taking, and you want to incentivize people being in the market. And that one will move us a little bit too fast. Like that one kind of come down like you should take it as she goes here. I'm gonna try one here. Just like I'm gonna try and take a risk just to try and show you here. See if it works out. I might be able to pull it off here. Anyways, so their approach is like, oh, let's tax their unrealized capital gains. Like what? I mean, they're right. It's true. Like the rich are not contributing as much in taxes because they keep it all in the market. Is the amount of money that they're keeping in the market, is it that much? It's actually like you tax them, like the amount of money that you get from that is not actually like that significant. It's not really, right? So it certainly doesn't make up for the economic consequences that you're going to get from that, right? You force them to, man, you tax unrealized capital gains. That is just going to decimate the market, man. That would just absolutely decimate the market, right? So it's, you get what I mean? I kind of lost the plot there, but the point was the left tends to see problems correctly, but the solutions that they propose are always dumb. This because the reality, I think, with the left, and I really truly believe this, and I know I'm getting like super political about it, but this is just the way that I see, and seeing what my bias is can be helpful to you. But I also think that this is something that you're going to see that you can kind of use to predict how things in politics are going to go, and you might be able to make good trades off of. I don't think that the left actually cares about solving those problems. I don't think that the left they want to act like we want to come in and make a better society, yada, yada, yada. But their approach is not actually let's go in and look at the data and understand the issue the best and create a framework that will provide the greatest amount of prosperity to the largest number of people and accomplish whatever particular societal goals we have at the current time. They're not thinking like that. What they're thinking is, I want to hurt the people that are rich and I want to get more power for me. That is it. They want to exert more power and more power over other people, and it almost always, their decisions almost always come down to that, right? Like COVID lockdowns, super great example, because there was of course there's a lot of science involved that says that a lot of the lockdowns and some of the things that they did during the COVID crisis were necessary things, right? But then we also know that there was municipalities that took it way too far. And why would they do that? Why would they keep the lockdowns in place for so long, even after the CDC said that you don't need it anymore and all of that sort of stuff, and they didn't really even have any cases? Because they just want to exert influence over other people. They want to say, I'm better than you and I can tell you what to do. And that's what matters to them the most. And not actually like, what would be the best policy? You know what I mean? Or sticking it to the rich people. Like, if the rich aren't paying their taxes, so what do we do about that? Well, first of all, you really have to question, do we really need that tax revenue? If we're going to get more tax revenue, is that really the place that we want to pull it from? Because it's really not about, like, screw fairness, guys. What's effective? What's effective is where do you want the capital allocated? Do you want to take capital out of the markets where it's funding businesses to grow? Or do you want it in the government doing the things that the government does, right? Because here's the thing, the government, if the money that the government allocates, it's always going to be allocated into ineffective things, lost causes, right? Like if it was an effective thing that created growth and was profitable, then business would do it, right? So the only reason that you ever need the government to do something is because it's something that is basically a loss. Okay, like feeding the homeless. That's the thing that's a loss for you. Now, is it a good thing? Yes. Does it provide a benefit to the wider economy? And most, yeah, a lot of these programs can, right? So it's still useful to have it, right? But just from a general perspective, the more money that is being taken out of the market and put into government programs is going to hurt your economic growth. It's just pure and simple like that, right? So you never hear people on the left say, well, we need to have this tax because we want to this sector has too much capital allocated to it and we need more capital allocated to this sector. They never say that, right? Because that's not what's driving them. What's driving them is eat the rich, So it's just so frustrating because, but like I said, the people on the right are equally as crazy, right? People on the right, they want to get rid of the Federal Reserve. They think that we should be back on the gold standard. They believe all of these things that are just like economically insane. Like honestly, okay, taxing unrealized capital gains, that would be a disaster. Okay, that would be really bad. Okay, moving back to the gold standard, that would also be a disaster. I don't even want to think about what would happen to the U.S. economy. We tried to go back on the gold standard. Okay, the banks in the U.S. would just get like, oh my gosh, I can't even imagine how awful that would be for like the corporate banks. Like, how are we ever going to finance anything if we have to finance it all with gold. It's just like crazy. So like, I don't know, man. I'm very conservative, right? I think that principally, like from a principles perspective, I think that the conservative principles make sense, right? There's the Constitution and there's law and order, and we want to make changes and we want to make society better, but there is a process for which we need to do that, and we need to be cautious about how we make those changes, right? Versus the left, like their principles, I think are often, hey, look, I totally called that trade. Did I not call that trade almost perfect in the treasury? Okay, so like, I'm actually going to take it. Well, let's see if I can get filled at 27. Okay. $27 might be a little hard though. Yeah. Yeah. Okay, fine. 26.5 maybe. No, they're gonna make me. I could chase it all the way back to 24. That's fine. Hmm. Good job. Thank you. Yeah. Well, so the reason I wanted to make that trade was just because I could go back and watch the video again. Okay. It was forming a very clear liquidity hole here. Like when it came down, it was like this. It came down and it busted those new levels super fast. And then a ton traded at 24.5 very, very quickly. Like think about how briefly 24.5 was even a price and 20,000 contracts traded there, right? So that immediately makes me go, well, this is a liquidity hole that I can probably pull a little bit of money out of. Because in all likelihood, it's going to have to rotate around that price a little bit, if not get launched back up. So that doesn't necessarily, I'm not going to take that trade on like there's going to be a full on reversal, but for a short term one, yeah, that action's pretty good. But it's a high risk one, right? I've tried that a couple of times and I didn't get as good of a signal and it went lower. That happened. When was that? When was that? I don't remember. See how easy that was? Yeah, I don't know. You don't see that one as obvious as that very often, you know? And it is a risky trade. Like I have to say, it is a really risky trade, right? Like especially for me to have taken it with three contracts, and averaged into it. You know, they could have pushed like way through, and I could have puked hard. And I did have to take a little bit of unfavorable excursion, right? It did go two. Well, 2 ticks against me isn't too bad. 2 ticks against me and 5 ticks favorable. That's not bad. So sometimes I wonder if I'm just a disagreeable person in general. Like, nah, I just have a tendency to just like not agree with anybody. Maybe that's why I think that in like all things economic. But then I start thinking about it and I'm like, but no, because I know exactly what I would do. Like if I was the one that was able to set like the agenda, you want to hear my agenda? I have like a 10-point agenda. Okay. I think that there's 2 parts to the agenda. One thing is that we need to take care of inefficiencies and exploits that upper classes are using to take advantage of the system to everybody else's detriment, and we need to fix those holes. So that's the first half of it. And then the second half of it is that we need to do things to help make the lower and middle classes more productive and see more capital allocated to those sectors, because you can't just say, oh, well, we need to be nicer to the poor or something like that. Like there seems to be this idea in the leftists' head that if we tax, if we take the richest out there down a rung or two, that money will just automatically go down to the rest of them. And this is not the way that it works. Probably what happens is that money goes to the government and then it just gets lost, or it gets sent to other billionaires, essentially, right? So what you need to do if you want more capital to be allocated to the lower and middle classes, you have to make the lower and middle classes more valuable and more productive. Okay. And there are some policies that we can do for that. Okay. So for the first half of the things, okay, the first thing that we need to do is there is a where you get like the super rich from, okay? CEOs, board members, people at the top of the corporate ladder, okay? And one of the problems that you have is that if a board is like paying themselves too much or they're doing a bad job, it's very difficult to get rid of them. So we need to have corporate governance reform. I don't think that corporate governance reform should be like what Elizabeth Warren does, and that we should like mandate that there should be a certain number of minorities on the board and things like that. Let's just change the rules around a little bit so that it's more fair. Just change the rules around so that it's more fair, and give workers a seat at the table too. Okay, I think that they should be required to have employees with a seat at the table as well. Why does the NT8 bridge reset when I first bought this thing and never did that? Now does it 2 to 5 times a day? It's a good question. Hey, have you downloaded the most recent version that was released on like Tuesday? I have to look at that. I do kind of feel like it would just be better if I was just connected through Rhythmic though, right? Instead of the bridge. Okay, so corporate governance reform. Very important. I think that a lot of the ideas that Elizabeth Warren has, they're crazy, but you know what? Some of the ones that are good. If there was anybody that I would talk to about corporate governance reform, it would be Carl Icahn, right? Because he knows that stuff really, really well. He's very progressive. But anyways, okay. Next thing is we've got to fix the corruption in Congress. Okay. Congressmen shouldn't be owning stocks. They shouldn't be trading in stocks, period. All of their investments should be held in a blind trust, right? There should be a blind, it should all be index funds and managed for them by a blind trust, period. They shouldn't be able to trade on that. Their financial success should be entirely dependent on the financial success of the U.S. economy as a whole. End of story. You're speaking like someone who's never employed I've never employed a single person. You're right. I just know that the corporate governance structure is broken. If employees had a seat at the table, the business wouldn't be able to function at all. Well, I didn't say that they would be able to completely control everything. I'm just saying that when you're a board and you're making decisions without having any, here's the thing, okay? I think that more money should be spent trying to grow the business by paying employees, by rewarding employees, right? What I've seen too much of in the past 10 years is the company saying, growing is too hard, just put it into stock buybacks. Right? Yeah. Well, we're talking about corporations here, not a house cleaning business, of course. Okay, but when we're talking about a corporation, so like a good example here would be like an airline industry company. It's probably the best example of a situation like this where flight attendants do not get treated very well by the industry. The way that the industry, with flight attendants, basically, can you believe you can be a full-time flight attendant and be under the poverty line? Like there are literally like first-year flight attendants making less than 20K, in fact, because you don't get paid until the doors close and stuff like that. And anytime that they have like negotiations to negotiate better pay and stuff, what happens is the pilots, They know what they're doing, and they have these advocates for them, and they will negotiate this great deal with the airline industry. And then the flight attendants are just kind of left to try and grab whatever scraps that they can, which is not very much to begin with. And then they always seem to be completely incompetent about it because they just don't know anything about how business works or any of that, right? And so they never have a seat at the table. This happened even in the instance where Carl Icahn tried to take over an airline, right? And I'm sure I know he's a progressive guy and he cared about the flight attendants and stuff, but they got screwed. They got screwed, right? This happens too often in things, and I'm not saying that they should be able to completely control the company or whatever, but I am saying one of the board members should be a representative from the flight attendants. That's all I'm saying. That's all I'm saying. Okay. Another thing on that, another problem that we have is that almost all of the biggest controllers, when you're doing a vote, if you're doing a vote and you're trying to do some sort of, like you're trying to go against what the board is doing, the board has this huge advantage already because they can kind of control the narrative. They send out the letters and they give the recommendation about how everybody should vote and stuff like that, right? But then the other problem that you have is that the most powerful interest is the index fund. The index fund, it has always controls the most shares. And so whatever the index fund wants to do is what happens. In the past, that has been helping their buddies on the board. I think that the index funds have become more aware of this. So now they're starting to look into, okay, how can we maybe give the people that we serve a greater say on what we do at the vote? But the problem that they had with that was that they found that they just didn't care, that people just didn't care enough to do anything, to care how they voted, right? So I say, here's what I say. Shares held by index funds just don't vote. Like Fidelity and BlackRock and all these, they don't get a vote. If they're putting their own money in, then sure, they get a vote. But if you are basically managing other people's funds in an index fund of some sort, yeah, sorry, it froze because my USB switch flipped over for some reason. Sometimes the USB switch thinks that the other computer is turning on. I don't know why it does that, but okay. Index funds, they don't get a vote anymore. Okay. That equalizes that out again. I really think that if people are really just trying to make money off of the standard growth of the S&P 500, then they're giving up their vote. And instead of giving that vote to BlackRock, those shares just shouldn't vote. Okay. So that's the other reform that I would put in at that part. Okay. But we were moving on to part 2. Okay. Are we okay? Are we okay with the first one? Okay. Part 2. Congress should have all of their assets held in blind trusts, and they can't individually own stocks. Okay. That's a big one. And then they have to deal with lobbying. Now, I think that the lobbying industry is an important industry. You have to have people that are experts on issues because it's impossible for the congressmen, even with all the resources and the staff that they have, it's impossible for them to be experts on everything. Okay. But lobbyists have basically become like legalized bribery. Okay. So like the first thing is you should not, oh, you know what? My camera probably died. I see. All right, well, I'll just turn that off. I'll just turn that off and leave my frozen face there because it's hilarious. It's hilarious. Ah, dude, it really is. That's great. That's great. This is what I'm saying, conflict of interest. Okay, so I think that there should still be a lobbying industry, but the one reform that I know has to happen in the lobbying industry is that if you are a congressman, you can never work in the lobbying industry ever again, okay? Because what they'll do is they'll say, okay, well, if you're nice to us, then when you aren't elected anymore, we'll let you work for us and we'll pay you a ton of money for it, right? That shouldn't be allowed. Where is the Canon? It's in the box over there. Actually, I should check it really quick. Dude, I put the Canon up for sale on eBay, and I got so many offers for it, but then nobody has actually put in a bid. I've got like a bunch of watchers, a bunch of people will watch it. I still got a day. I think that what might happen is people will bid on it like at the last second, but geez. Okay, anyways. So that's part 2, okay? Part 3 is that there needs to be market reforms. Okay? There needs to be market reforms. The entire system that we have set up for stock exchanges is archaic and unnecessary. This whole thing of like payment for order flow and paying other people to do things, and also of dark pools and having all of this execution like over the counter for dark pools and things like that. It's absolutely unnecessary. This is a whole system that was created essentially by, back then they needed it and they were providing a service. And now we have the technology. We don't need it anymore. There is no reason that every order can't go directly to the exchange. There's no reason that every person that trades stocks shouldn't be able to see the order book, right? Just like we trade on the CME, why don't they trade like that in stocks? Tell you why. Entrenched interests. That should change. Okay. No more dark pools. No more payment for order flow. Just complete transparency. All right. And that would get rid of a lot of these like leeches on the system and make trading and investing actually, fair for small people. Right? Because right now it's like the house wins every time. And it's because of the way that the market is structured. Okay. I would also get rid of the wash trading rules or rearrange that somehow. Like if you're day trading and maybe you can have a test. Maybe there can be a test that you have to take for you to become a qualified day trader. You don't want to work with Citadel, right? I mean, I would, if they hired me, I would work for Citadel. I think that Citadel is an okay company, but I do kind of want to readjust the market laws so that they're not so much in Citadel's favor. Yeah, I do. Sorry, Ken. I think you seem like a good guy, but I think that you guys kind of have an unfair advantage because of how the market is structured, and we need to change it. Sorry. Trying to save my possible future job prospects, huh? I think that we should make these changes. Okay. Now on the other side, which is like, what are the things that we can do to help more productivity for the lower and middle classes? Okay. Well, the first thing is that we should get rid of capital gains taxes for anybody that makes under $250,000 a year. Okay. $250,000 a year, that's like everybody but like the top 1% or something like that. Okay. So if you're a little guy and you put some money at risk in the market and you made money, we should encourage that because that's how people build wealth, and we shouldn't be taxing that. I think that we should just completely get rid of that tax for people. This whole thing of like, you have to put your money in a 401k or an IRA, and it was really just created to generate business for Wall Street. And it's completely unnecessary. Everybody should just be able to have whatever kind of account they want, and they should be able to do whatever they want. If they want to buy index funds in it, good. If they want to buy individual stocks in it, good. If they want to buy bonds or gold or oil or whatever the hell it is, they can do it. And as long as they are not making more than $250,000 a year, there should not be a capital gains tax on it. And that would incentivize regular everyday people to go out and generate and build wealth the same way that the people at the top do, because that's really how you build wealth, guys, is you gotta generate wealth producing assets like stocks or real estate or whatever the deal is. All right. So do that. Right. Number two thing is we need to have a good look. I mean, I think that Republicans have been working really hard on this. This is a really complicated issue, but you've got to make it easier for people to start small businesses. There are so many barriers to entry in really big industries that are really a problem. Um, there are some industries where the taxes really just make it completely impractical for you to really start your own business in there. Okay. It's not all businesses, but some businesses that is a problem. And that's going to come down to the individual businesses, but you're going to have to look at that more. Okay. By the way, the liquidity is polling for the PMIs, right? So let's pause on my big long rant here for a little bit to see the manufacturing PMI. We're looking for a reading of 59 and prices paid 80. So we'll see here about 30 seconds. Taxes make you a slave in a fiat system. Effort for no pay equals slave. I wonder if this one is going to move them significantly again, just like that last. Non-farms has moved the treasuries quite a bit here today. Well, I shouldn't say I'm quite surprised, but I didn't think that they were going to move very much. Oh, did you see that big bid that pulled? Somebody stuck a really big bid and then they canceled it. Okay, so the PMI was 57.1 versus an expected 59, so slightly less than expected. And prices played was 87.1 versus 80, so that's a sell. I do there. That's a sell. Okay, so back to what I was saying. You got to make it easier for small businesses to start up, right? The other thing is, and a set of regulations that I think that they should look at in particular is they should make it easier to crowdsource equity. So right now you can do like Kickstarter, right? And that allows you to crowdsource the creation of a product. They say, here, we're going to make this product and you can all invest in it. And then basically it allows us to sell the product before we make it, right? Cool. But you can't really do it for equity. There are like websites out there that are trying to do it and stuff, but there's kind of problems with it. Part of it is that like to invest in these kinds of ventures, you have to be like a qualified investor. Oh, by the way, I got my little book. I'm not gonna dig it. I put it in the backpack, but I got my my training materials. So I am gonna get a Series 65 license so that I can invest in hedge funds and pre-IPO deals. I think it should be fun. That should be fun. Okay, but because you have to be a qualified investor and stuff like that, and all of these other reporting requirements, a website that's true like crowdsourcing equity doesn't really exist. Now you got to be careful with a system like that because it could really create a lot of opportunity for like fraud and stuff like that for sure. So I understand why their laws are the way that they are, but I still think that you should be able to crowdsource equity. I think that there should be a website where I can go and say, I am going to make X thing just like you do on Kickstarter. But instead of offering them the product, you can offer them a share of the profits to eventually in the future become a stock or whatever the deal is, right? Because my vision of the future is like radical decentralized entrepreneurship. Lots of people starting businesses all the time, like I think that it should be something like my ideal vision of the future is that everybody has some side business of some sort where they're trying to get other people to invest in it, right? I don't know how you do that and keep like everything, keep the fraud out of the system. That's a real problem right now is the fraud. But I think that there are lots of great ideas out there that people have that they would make great things, but they just don't know how to fund it. They just don't know how to fund it. They can't find the people, and you're really dependent on having the connections and knowing and getting the angel investor capital and all of that sort of a thing. And I think that you should be able to crowdsource it, right? So I think that they should change some laws around there. So those are three things that I think you can do that would make the lower and middle classes more valuable. And we may come to a point in the future where being a big corporation is actually kind of a liability, that it kind of becomes difficult to, you're not nimble enough and the economy changes too quickly, Whereas my idea of the future is there's a lot more small businesses, but they're not like small businesses like Uzi's small business. Like Uzi is a small business that's really cool, but like I would invest in Uzi's business and get a proportion of the profits. Like that would be great, right? But we can't really do that in this economy, can we? And they're going to come back to 30, huh? Well, that did not go the way that I thought it was going to go, but I do think that manufacturing prices paid is not good. How much slippage do you think I would get on a ping of 126 milliseconds to the exchange? Oh, that's, like, let's say that your ping is 30 versus your ping being 126. How much greater would the slippage be? That's really hard for me to sort out because, like, there are some situations where you're just going to catch slippage, right? Like, there's going to be a situation where you have a stop order placed out there on the exchange. Okay, so that guarantees that you get the best execution that you can, but there's still like, X hundred people in front of you, and in the ES, I've caught slippage of 10 points before, right? I've caught slippage of 10 points before. So yeah. So what it would be on average, I don't know. That's hard to say. Just realize if you're trading equity indexes that the risk of slippage is way higher than most e-mini traders realize. We don't think about it or talk about it a whole lot anymore because we're so focused on the treasuries, but the slippage is a real problem over there. Sorry. Okay, so that was like what my 6-point plan. Like, here's the thing. Most of the things that I said are kind of like things that leftists are kind of talking about, like not the solutions that I have, but like the problems, or those are all problems that leftists are more interested in. Republicans are kind of like, everything's fine and we just need to make things as easy for businesses as possible. Whereas I'm the one that I'm coming in and I'm saying, no, like there's some problems, let's fix these problems, right? And here's some problems. But my solutions are not the solutions that the leftists would give, right? My solutions are more of a conservative based solution and frankly an evidence based solution. Like 40 ticks. Like I've literally had taken a 40 tick slippage before. I think I don't remember anymore the exact, but I remember there was one where it was almost like 5 to 10 points. Like you go and you look at it and like all of the liquidity through this whole area pulled, and so anybody that stopped out, they stopped out for multiple points. And it was enough that if you were doing any kind of like arbitrage market making strategy, where you take on more risk, like what I'm doing right now here, where I'm averaging into a risky position, right? The amount of the amount of slippage that you catch on it would just completely destroy the strategy, right? Can happen for sure. And one of the hard things is that when you're trading on sim, doesn't always give you a very good idea of what the slippage is. Although, with us trading micro treasury futures over here, the slippage hasn't ever been too terrible, has it? Except for that one time that we did the 5-year, like nobody was trading it. But when we trade the micro 10-year, I'm usually able to get out where I need to. But I've never really used stop orders, so. I know. Not many comments on my overall 6-point plan. Well, actually, but you guys did like the no capital gains tax, man. That's the biggest one. I was just gonna focus on one. It should be that, right? No capital gains tax. Man, my nose really itches here. Sorry. Can you put the stop into the exchange? Yeah. So when you submit a stop order, an order of type stop, it's supposed to sit out there on the exchange. Now, there's other options, right? Like when I do a volume stop here on Jigsaw, that is a platform synthetic stop, essentially, right? It gets sent to the exchange as a market order. If you looked at the MBO data, and you looked for stops, those orders that are, stop volume orders from Jigsaw, those would show up as market orders still, right? And you can also, I think that CQG has a type of synthetic stop that they can do too. So it sits on the broker and triggers it. But if I just come in, my understanding is that if I just come into here to Jigsaw and I click type stop and I click on here, it becomes a stop that's resting on the exchange. And there's a big order showing up down below us. S&P 500, maybe, yeah, they're kind of turning around. It kind of looks like they want to make a move up. We'll see. ATR stop for the S&P would be around 45.38. I don't know if that's a good trade. Let's try it. Let's try it. We'll do 2. And 1 will be at the view out there. Actually, right there would be fine. Have you tried writing your ideas in a letter to politicians? I mean, it probably won't do anything, but it's worth a try. Yeah, probably could. Well, I probably should. I should talk to a politician, an actual politician. I could go and meet my local representatives. Could go and talk to Mr. Stewart. But most of the ideas that I'm talking about, I really think that you would need a. Well, I don't know if the Republicans would do them, to be honest with you. I don't know if the Republicans would actually do them. I think you'd be more likely to see Democrats pick up that agenda. You never know. There's a lot of bipartisan support for some of those ideas, but there's also like a lot of bipartisan resistance to a lot of those ideas because a lot of the ideas that I'm talking about really are counter establishment and, harm the businesses that are already existing. Like especially what I want to change on in the market, in the exchanges. Like the NASDAQ might like that, but the NYSE won't, right? Oh, what do I use for the thing at the bottom of the screen? That's just built into OBS actually. I wrote a script that will take that takes your donations and outputs them into a file, and then OBS just reads that file out, and that's how we create the ticker down at the bottom. I probably need to update it a little bit because I haven't been starting that. The bot it would also read out your messages, and it had like accents and stuff. But when I tried starting it the other day, it didn't like it for some reason. So you could go look at that. maybe what I should do is go and rewrite that in some more low level language. Maybe I could just do it in C#, but I could also try doing it in C++ or something. But add some like real audio kind of get into real audio programming stuff so that it would only read them out when I finish talking. My nose is really dry here for some reason. It's really dry and itchy. I got the allergies, my boys. And I didn't take a Claritin yesterday because I was wondering if the Claritin was making me sleepy. I love you, Seth. Thank you so much, NASDAQ Killer. Yeah, my face is frozen. I don't know what the deal is with that. Let me come in here and check this real quick. Yeah, I don't know what I did, but I guess I left the camera on and it was unplugged. So I had so the camera battery died on me, and I've never gotten a dummy battery for the Sony. Probably I should. Only Benadryl works for you. Allegra does nothing for you. Well, I was using Claritin, right? The Claritin is the one that kind of stays in your system all day and kind of builds up over time, right? So I was using that for a few days or a week or something, but then like earlier in the week I was feeling really sleepy, and even like in the morning, and I was like, well, what's going on? So I hypothesized that the Claritin was making me sleepy. So I didn't take it yesterday or today, and I'm feeling fairly awake today. So maybe it was the Claritin. But dude, my allergies are insane. I don't get how this is. I remember as a kid, my mom has allergies, and she was always like, we couldn't have a pet because mom has allergies. Okay, whatever. I don't have those allergies, and when I'm older, I'm not going to be some fragile person, that completely rearranges their life based on their allergies. Well, then I started to, it was like a month ago or so, and I just had this one day where I just had this crazy sneezing fit. Like, didn't matter what I did, I was sneezing like crazy, like over and over. It was almost debilitating. Like, I didn't get any work done that day. So I decided to go to the doctor, which, by the way, I need to set up another appointment because I had a follow-up appointment and I forgot about it. I need to reschedule a new one. But I did go and get the test done. So they do the test where that's actually two parts, actually. One part is that they just put the allergens on your skin. It's actually, you want to know more about how the test works? It's actually really interesting. The first thing that they do is they inject you with like glucose or something like that. Some saline solution. It's like the most innocuous thing that you can possibly have, right? And they just put a little bubble underneath of your skin. And that is to see like how much does your body react to a foreign contaminant in general, right? Then they would have these things where it would just put it on the skin. Like it was just like a piece of plastic, and they would just push it into your skin really hard. And then on the other side, or on the shoulder, actually, was like up on the shoulder part, whereas the other parts were on my arm. On the shoulder, they do the same things, but with needles. Okay. And then what they look at is all of those will generate a welt, but how big that welt is in comparison to the welt that was the glucose basically determines how allergic you are to it. And then they do the ones that are on the top of your skin based on how much you react to that will determine how much they'll actually inject you with to test for that. Because if you're really allergic to it, they don't need to put as much in you, right? So I do that, and I was allergic to like literally everything they tested me for. Like, the only thing that I didn't test as allergic to was feathers, which is really crazy because I have a bird, right? And you would think that if there's anything that I would develop an allergy to, it'd be the bird or something. But no, the only thing I'm not allergic to is the bird feathers. But like, I was allergic to molds, so they did like an extended mold test too. I was allergic to all of the molds. I was allergic to all of the pollens, all this stuff. But then there was two things that I was particularly allergic to. One of them was Russian sage or something like that. Basically tumbleweeds. Basically, yeah, the camera froze with you looking really pissed. I know, right? That's why we kept it that way. I was having a rant about if I was in charge of domestic agenda, what I would change. And I was talking about removing the capital gains tax for lower earners and changing corporate governance structure, that and complaining about how I feel like both the Republicans and Democrats on both sides of me are kind of like doing crazy things, even though I don't consider myself a moderate. I consider myself a conservative. Anyways, and so that's why I look angry, because I was ranting. You have cockatiels and parakeets and a chicken. I have chickens and I have a sun conure. I have too many pets. Oh my gosh. So you know what's one thing that's driving me crazy is so normally at night I will take my air filter and I'll just put it in the doorway and have the air filter blow the air into here. So the air in my office tends to be better because I run that air filter there, but I'm also doing that to try and blow the cold air in here because this room just gets hot no matter what you do. It's really frustrating. I think part of it is just because it's like, you know, two of the walls are to the outside. But then the other problem is just that there's a computer in here, so it gets hot. So I try and blow the cool air in, right? Well, yesterday I didn't have it, and she keeps taking it. My daughter takes it because she has a hedgehog in her room, and apparently it smells or something like that. And I'm sitting here like, hey, you know what? Here idea. Just crazy idea. I know, but just hear me out here for a second, okay? What if we just didn't have a hedgehog? I wish the camera was working so that you could see me here, but you know, like, no. Let's just not have a hedgehog anymore, right? But I doubt that would go over very well, but I don't think she ever plays with it. Maybe I'm wrong. Maybe she's playing with it upstairs in her room all the time, and I just don't know. But I'm just kind of like, why do we have a hedgehog? Especially if you don't like the way it smells. I actually think since we've gotten our puppy, I think that my allergies have gotten better because I think what happened was the other dog that we had, the Yorkie. You know, a Yorkie is supposed to be a hypoallergenic dog, but I think that I'm probably like allergic to the dander. And that dog had allergies and his skin was flaking off all the time. So I was probably allergic to that. And that what might have been what was leading to like my sneezing fits and stuff. But it'll just kind of come and go. I don't know. But the thing that was so crazy, let's take some time. I feel like, oh well, actually I did. You know what? I actually got like my target. Well, not my target, but I actually got something pretty good there in MES. Of course they're getting the excursion against me, but I might add a contract later. Let's just kind of let these go for a little bit for fun and see what we get. This one in the treasury, I'm getting a little bit frustrated in, but I probably just need to give it a little bit more time. The one in ES, probably what I should have done was, if I had been paying attention, probably would have just stopped out back at the entry point and only taken $25 on it. But whatever. Anyways, it's just so weird to me that I go and I get tested and I'm like allergic to everything. The other thing I'm really allergic to is grass. So great, everybody has grass, right? But apparently I'm really allergic to grass. How can I be so allergic to things? Like I don't think that I feel like I'm allergic all the time. I just like my eyes started watering past few years, but that's it. Muso below VPOC, where you take it. So which one are you talking about? So I took a trade earlier in the treasury with a sim account. It was a pretty risky trade, but on it bouncing off of the bottom that I thought was like a really good trade. Like I was like, oh, that one's the way that went, that's going to bounce hard. Okay. Now, this one I took kind of more because I did not like the ISM number. I thought that the ISM manufacturing prices paid being 87.1 was pretty bad. And so I thought that we'll probably continue to see treasury selling here today. So that's why I took that one, right? I guess technically I sold it below the volume point of control, but whatever. I don't really pay attention to that. Not that it doesn't matter, but it doesn't matter. That trade over ZN. Yeah, no, I don't necessarily care if we're above or below the VPOC or anything like that. I only care if there's like a liquidity hole. That can indicate that there is a liquidity hole. I think in this instance it does. There is probably a liquidity hole right here, which is why I'm like, that one we probably just need to give it a little bit more time, and maybe in 15 to 30 minutes we might see another sell order, right? Kind of makes you wonder why you have volume profiles up. Well, that's actually an interesting subject I have a theory on, Lucas. So my theory is this. Before we had the wonderful jigsaw tools, the only way to really see how much volume was trading at each price and how much was buy and sell and so forth was from watching the volume profile. So that's what you would watch, is you would watch these numbers and you would watch as they traded, you would watch the numbers increase, and then you'd kind of have to do the math in your head to see how much volume had changed through there, right? And that, as you're watching it, they would notice the volume piling up in areas, right? Then I think what happened was the TPO guys came along, right? So TPOs came around and they had all these series about where we started based on the previous day and the day types and stuff like that. So the day types is definitely like a thing that like there'll be double distribution days and trend days and all that sort of stuff. It's just that the statistics that I think they pull out of those, I don't think that there's edge in those. I think that if you really do that with when you add like how much risk you have to take on for them, that you're not getting good risk adjusted returns. Okay. But the TPO guys, they had their stuff. And then we had the technology to do volume profiles. And so they just said, oh, we'll just do a volume profile. It must be the same thing as a TPO. And so they use the TPO stuff. And that's essentially where you get all of the theory around how to use the volume profile. I really think that that's where it came from. Right? So what I find happens in the retail trading world is retail traders will get a hint of something more serious, a real edge, but the real edge is almost always beyond the average retail trader's understanding. And so they just get the high level explanation of it. And then what that means is then it's like a really terrible game of telephone, right? They'll just, it'll just get more and more distorted over time. In my case, it helps me have a visual clue on how high/low we are. It's sort of a better visual clue than remembering prices. Does that? Yeah. Like it gives me a pretty good idea that there's a liquidity hole at 30 and that they've been able to trade around it about 2 ticks up and down from that. at the moment we're trading the lower end of the range, but it's not breaking out. In this case, I don't think it's breaking out because of the liquidity hole. It looks like that the liquidity hole is mostly healed, but you're just not getting the market orders to push it out of the bottom at the moment, right? So when I can analyze it from that perspective, I think you get a much more accurate view of what the market is doing. Right? It's much more nuanced as well, right? Like it wasn't that the volume profile guys or the auction theory guys had something that was just like completely off base. It's just that what they were doing was making a theory just based on their observations of the movement, and our ability to really truly see what's going on there is very limited as humans. But then when we had the ability to really analyze it from a quantitative perspective, then we kind of figured out what actually causes some of these things, and you get a much more nuanced picture. But you also get something that's like much more real. Like liquidity holes are real, and if you can identify them, you can get a really good idea of why the market is moving the way that it is, right? That's why we were able to take that trade down at the bottom. It was just like, okay, we saw a break of the lows. It was really fast. And then a ton traded at 24.5. So yeah, that could be somebody like sometimes there's icebergs down at the bottom and those cause reversals and that sort of a thing. And that's always the way that I approached it. But the way that I approached it this time is, okay, there's like really heavy selling, but they generated a big liquidity hole at 24.5. They traded so much so quickly that they're going to get sucked into that, if not like outright reverse. And so I was able to take it and even add a few contracts, right? Because I know that they're going to rotate around that price a little bit and then just take the range, right? So it's not the volume profile and auction theory is wrong. It's just there's better models now and most retail traders don't know about them. And I can explain them to, like, I can explain to you, like, this is what a liquidity hole is. This is what, creates them and stuff. But like the actual math, like I don't feel like I understand the actual math of how they derived that very well. But that's how they came up with this. There's the actual real math behind it. And I would highly encourage you guys to go and read the market microstructure research that allowed us to discover this stuff. Ooh, am I going to get my fill? Am I going to get my fill? I could try buying the ES again here. I don't think that I don't know if I really want to take on more risk at that moment. I think that what I will do on the ES is like if I get a little bit better of a move up, maybe I'll add on it. Like maybe at 45.29. Sure. Okay, so I'll put a stop order in at where I got in originally. And I'll take it again to if they get to the 30. Right there. Okay. So yeah. But the other side of that is that you don't probably not worth it to have your volume profile take up like a huge portion of your screen or anything, right? I need to hire a math guy to walk me through that book. It's not something I would have a problem with. If you're interested, I am interested in doing that. Or did you mean to say that you're not interested in doing that? Or I don't know. Like here's the thing with that book. There is some complicated math in there. I think that what makes the math hard though isn't that the math concept that is being used is really that complicated. It's just hard to keep track of what all of these variables mean. So once you have kind of been in the space for a little bit and you kind of know what the different symbols mean, like omega tends to be volatility and that sort of a thing, that helps so much. Oh my gosh, that helps so much, right? But the thing that's cool about the book, I think, is that you'll be like reading the math parts and your eyes will just kind of be glazing over. but then they do a really good job of explaining what it means. Like they do a really good job of explaining the impact of it, right? And they do a really good job of explaining, like, how did we get to this point, if that makes sense. So like, as the way that the book goes, I thought at first that the book was organized in terms of like, okay, I'm just going to show you all of the properties about these things, and then we're just going to get like more and more complicated stuff as we go and that sort of thing. But that's not actually how the book is structured. The book is structured this way: markets are more statistically efficient than they are informationally efficient. And the informational component of prices, orders will move markets regardless of whether or not there's any informational content behind them. And so that this whole thing that I've kind of been teaching you, right? That whole book is basically structured towards proving that to you, and how it was that we came to that understanding. So they go and they just start at the most basic level. Okay, the sorts of things that we did on our own, frankly. We could come in and say, okay, how big are the orders on average? How does the spread change? What are some kind of statistical abnormalities when we come in, we look at the order book that we can see, right? And so they went through all of that stuff, and they found all of these models to kind of explain all of that stuff. And then they came to this point where they found, oh, but there's like autocorrelation of order signs, which means that if you see a buy order right now, you are 0.5% more likely to see a buy order exactly 1 hour from now. Okay. What causes this autocorrelation? They had all of these theories about it and stuff. So they made all of these models to try and model this. And then they came upon a model that basically suggested that they were parts of larger orders, that there's an order that's being executed over the whole course of the day. And that's why you get autocorrelation, right? So then they go in and they start to do that sort of thing. And they, and they looked at it in terms of, how does this match up with market making behavior, right? Because if the orders are autocorrelated, how come the prices don't completely match up with that? So then they figured out how the market makers account for that sort of a thing. And then they started to do the actual research about, okay, what are these large orders? So they started going to the banks and stuff and saying, hey, you give us your data, like when you execute a large order. And they started analyzing that, and then they discovered that there was like all of these really consistent behaviors that the banks were using to estimate how far their orders were going to move the market, right? And then that brings us into all of the stylized behaviors that we talk about, that they create liquidity holes, and there's a square root law. So, as they start to move in, the liquidity becomes stressed, and that's kind of why the order gets so big. You double the size of this super big order, it doesn't make it have any larger of an impact, because the order book is already strained as far as it can go, right? And then all of this stuff about like the way that it kind of creates reversals, because you leave a wake behind you. Like now all of a sudden they understand, okay, like this is the mathematical properties of what happens to the liquidity as you trade it, right? And then that brings them to the mesoscale stuff, which is, okay, so all orders have an impact regardless of whether there is information behind them. And some of the largest orders that are out there are the most uninformed and random. That is, they are just systematic strategies to hold a certain type of asset. And those are some of the most powerful forces in the markets. So now all of a sudden we understand why the market is so statistically efficient but informationally inefficient, right? And that's the way that the book is structured. So when you read them and you especially pay attention to the conclusions at the end, man, I have to say, that book makes everything else you ever read about trading just look like absolute trash. Just absolute trash. because like it's real fact-based information, and it's real information about like how the market like truly moves. When you go and you look at all this stuff where people say like, if we break a daily low, we're likely to reverse with it, like it's all nonsense compared to this other stuff that's like got real data behind it. Lilo's doing another discount. Those guys are always doing discounts. Oh, dude, I saw this. Who are they called? Hold on. This is interesting. They emailed me, and I was like, oh yeah, I'll meet with you. They said, okay, yeah, we'll send you a date next week, and then they never got back to me. Which, fine by me. But oh my gosh, what are they called? Gotta remember who they're called. Tick Trader. Tick Trader. Was it here? Let me see. Yeah, ticktrader.com. Okay, this is so great. You're gonna laugh when I tell you what it is. You listening, Lucas? You're gonna find this really funny. Okay, so here you got here's a funded trader source. Okay, your combine is the same thing. You connect your platform. There's an evaluation space, and look, they have all of these different plans, and there's like 100K, 150K, and then the 25K, which is, okay. Well, so here's the kicker. All right. There's no consistency requirement for the 25K one. Let me say that again. There's no consistency requirement for the 25K one. So you come in, the target, or sorry, is it the 25K one? I forget which one it is. Essentially, sorry, the news squawk is talking in my ear. Okay. So essentially you come in, you take one YOLO trade and make like $2,500, and then you're done. You pass the combine. So like Ritter is saying, like, if you're really, really good, if you're really that good, probably most of you aren't, but if you're really that good, then go ahead and do a combine and do the biggest combine that you can. Or if you want to YOLO, because you can basically trade with somebody else's risk, right? This is the best combine to do that with, because there's no consistency requirement. You can come in and like seriously, with this one right here, I don't know if this is the consistency requirement. The one that didn't have the consistency requirement. Why is that 145 a month and that one is 99 for 15 days? Target max positions, daily loss limit, none. Minimum trading days, none. So maybe it's the 100K account. Okay, so we could come in here. We have to make $3,500, and we could trade max 14 contracts. Dude, if we went in and traded a max 14 contracts on these trades that we took here in the treasury today, we would have passed that combine already. Like, just take what we're doing and times it by, like, what we got? I got 3 here, right? 3 here, and I'm maybe gonna make 500. So if I was trading 12 contracts, yeah, would have passed the combine. Would pass the combine. Like, it would only take me 3 or 4 trades to do it. Isn't that crazy? Our Express challenge is our most popular one. And let's see where did they have the name? Yeah, at Express. So the 100K is the one. $99. $99 for a 100K account, but it's for 15 days. So basically, you come in, you can YOLO for 50 days. Isn't that great? Maybe we need to try it, because it might make more sense to do it in the E-minis, right? But probably be a lot easier to do in the e-minis because I mean, come on, all you got to do is make $3,500 a YOLO on the e-minis. Yeah, just come and do it in ES and take 2 contracts and try and hold it all day. Easy peasy. Now, don't know anything else about them, and like you when you're funded, are you actually live and all that sort of stuff? But who cares? Just yellow it, and then be really conservative after you get it. I love this, Mr. Top Step on Twitter. No one knows for sure what the ES and NQ are going to do for sure, but I'm not interested. I'm not selling or interested in selling on the first trading day of the quarter after a $10 billion market on close yesterday. If I'm wrong, I get stopped out and go back to the drawing board. That's all. I think he has a good theory though. Man, what we were talking about my allergies before that. I really hate it when my nose gets all dry. And by the way, the yield curve is like steepening crazy hard now. So remember earlier we were saying it's like was by 4 basis points. Now it's by almost 7. And in this instance, you can see the 5-year went down and the 30-year went up. So you're actually getting one of those rare cases. And you can see it here. 10-year went down, 30-year went up. Okay, you're getting flows in the exact opposite direction. So there is some like really big traders out there doing basically a bear flattener on this thing. I'm using the right jargon, right? Oh, by the way, we forgot about GameStop. Well, they weren't able to hold 200. That's unfortunate. Like they could get up there. They could be crazy good stuff, right? By the way, since we got 3 contracts on here, let's. Oh wait, why does it not like that? Oh, of course, because I have auto. Should put something like right there. Well, guys, I've had a lot of fun talking today. I feel like I've kind of talked myself hoarse already. Well, it is. We're actually getting close to the time to be done. Have you seen any April Fool's Days jokes? I haven't seen any April Fool's Days jokes. Not on Twitter, at least. I mean, I haven't been searching around. Maybe on Reddit? Yeah. Not really seeing anything. April, you know what? April Fool's Day sucks. We should just get rid of it. Because people are just too gullible. I'm gullible too sometimes, right? But I am going to be gone all next week. Just a reminder. We'll have a video out on Monday. It's already scheduled. Hopefully I have some time to spend writing some scripts. I'm going to focus primarily on this course that I bought to become a financial advisor. But we'll be able to write a video or two, I think, or two. Ooh, did we stop into our order over here in ES? Yeah, we'll put it there. I don't want it there. Okay. How are we doing on this? ZN 6 and 6. That one in the treasure in the ES, 56 ticks against us, 26 favorable. So that's not too good. That's not too good. But I don't think that it's done yet. Germany's Unipress says that they are reviewing the new Russian gas payment terms. Is like the feces gonna hit the fan next week because of this Russian gas thing? I'm a little concerned about that one. Because I don't think people realize how quickly things could turn south if they just turn the gas off in Europe. Even though it's like it's spring and everything. Like lots of industries and stuff rely on that. Yeah, I do kind of think that the liquidity looks generally healed, but the orders just aren't coming through really. And the fact that we're getting such a strong spread between the 5 and the 30 is probably a factor as well. Man, the kids did something that the baby does not like. Oh, okay. Chinese stock store after Beijing reportedly considers giving U.S. access to audits to prevent delistings. Yeah, they can't see they just kind of float back up to the 29.5. I wish I had been a little bit more on the ball here, because if I had taken off a contract when it was down at 27 or whatever, I could maybe add up here. Although I think I would rather add at 30 than 29.5. You know what? What the hell? We'll add one at 30. What we've got? The 30 year has got a lot of activity today, by the way. And silver. Apparently, silver's getting creamed. What's with that? No, they don't seem like it's getting hit too bad, but apparently there's a lot of volume in silver for some reason. Curious. Forex Live tweets, my favorite take is that the ECB can't end QE earlier and hike because it would damage the credibility of their forward guidance. Credibility, eh? Oh, they didn't feel it. Forbes says here are the Morbius Vulture post-credit scenes, so you don't have to watch Morbius. Is that show like really bad? Rotten Tomatoes. Need to go see the Batman movie. Haven't seen that. Critics, Jared Leto does his best to lift a story that never takes flight. Oh, is that Jared Leto? Yeah, that's Jared Leto. Oh, what's the rating? Oh, I hate their new. Oh, wow. Okay, 15%. I remember I was watching this video the other day, and they're like, "This is how you know that this movie is gonna suck." And I was like, okay, we'll see. Sounds like you have a good case. Oh, no. 15%. Yeah, apparently this movie sucks. That's funny, man. Sonic the Hedgehog 2 comes out on April 8th and has a 59% score right now. I know it will suck because of Jared Leto. Is that the problem? That's the problem, is we just don't like Jared Leto. I didn't really like his depiction of the Joker, that's for sure. But I don't know if that was necessarily his fault. You know what else I need to see is the one with Nicolas Cage. What is that show called? The Unbearable Weight of Massive Talent. There you go. Yes, The Unbearable Weight of Massive Talent. Is that already out in theaters? The tomato meter out of 24 reviews, 100%. and it's got the Mandalorian in it. It's got Pedro Pascal, right? You know what? It's something that bothers me. I hate pop culture. I don't think that pop culture is good, and everything that I always see about pop culture, I'm always like, it's like terrible. But then, like, when I think about how much I know about movies and actors and drama like that and stuff, it's like I know more than I. How do I know all this stuff? I guess just because I read it on Reddit. I don't know. How do I know all this stuff? To even make jokes like the ones that I was just making. Oh, it's got Pedro Pascal. That's the Mandalorian. See, who knows this shit? Well, I don't know anything about his personal life. That's where people get crazy. You gonna watch Sonic? I need to watch the first one. I haven't seen the first one. The kids watched it without me. Those little, they're always like, oh, we're gonna watch this movie now. Oh yeah, we know you're working and you got to do this thing, but too bad. You have to watch it now or never, forever. No. Well, 8:56. I don't think that after this that I'm going to have any free time. I think that my wife is going to put me to work here probably as soon as I get off. Let's see if we get filled here at 30. Come on. Only 150 contracts. Surely you can fill that. I'm going to put, yeah, okay. Good. I'm glad I did that. We'll see if they get it. Nope, that's not what we want to see. I don't want to add another contract there. I just want all 4 of them right there. I want out. Oh, Biden's going to be speaking. Oh boy. Biden speaks on March jobs report. Oh, and he just tweeted, tune in as I deliver remarks on the March jobs. You know what? Like, when I would read a tweet by Donald Trump, like I could always picture Donald Trump in my head talking, But when I read President Biden's tweets, that doesn't sound like Biden to me in my head. I'm pretty sure that he's not the one that writes those. It's pretty sure. I'm pretty sure, guys. Oh, come on. Just give it to me. It's one tick. The one tick, it wasn't a serious trade. It's a sim trade. I proved the point that I wanted to prove, and I hope that you guys learned from it, and I would just like the tick. Uh-oh, I got mentioned now. No, I can't. The machine is not on. Oh, okay, they got it. They got it. Somebody wanted me to approve a review. I'm on. It doesn't mean that the laptop is on. Carl Quintilla tweets small number of new 52-week lows, but man, and then he lists them. Pulte Group, never heard of them. Whirlpool, Citigroup, Fortune Brands, and Masco. What's so bad about Whirlpool? I have to go and look at that. What happened to them? Biden says the economy has gone from being on the mend to being on the move, if you say so. The jobs report was not that good, Biden. Like, the jobs report was kind of like there was a slowing. Don't tell him, okay? You know, if I had tried trading this in the micros, I don't know if I'd be too happy about it. They are flattening this curve hard. I wonder, so here's the question I think we should go and ask. Let's go to the question. Let's go to the question note. What's in the question note? You wouldn't get that joke. You probably don't watch Word Party. They have this section of Word Party. Describing a children's show to you guys. They have a section of the Word Party show where they there's like the What's It board or something like that, and they have a song about it. Where is it? I have a list of questions. Not that I care if you guys see what's in my notes, but I feel like I should hide them from you anyways. No. Here it is. Okay. So, will Mitt Romney's child UBI bill pass? If it passes inflation, if it passes, I believe wealth gap increases. Well, it didn't pass. It didn't pass, but we didn't pass. But actually, it did. I think it similar bill passed. We did get inflation, right? I don't know if it was due to that, but okay. Is inflation transitory? No. Can we say that is inflation is transitory? That question has been answered. Can we say that? Okay. So today I'm going to say 4/1/2022 seeing hard flattening is now a good spot to go flat, or that's the question. I'm seeing it go flat so hard. It's like people have to be putting a trade on, and I'm just kind of sitting here wondering, like, is that actually a good trade though? I'm not sure if that's actually a good trade. Hey, I got filled. Thank you, sir. Biden says that the corporations and the super rich need to pay their fair share. They do. Explain this to me, guys. I know you're gonna. Well, you know what? It's probably time for me to go. I shouldn't start this. Think about this. We'll talk about it on TikTok. Hey, if you're not following me, I'm gonna keep posting stuff on TikTok while I'm on vacation. So make sure you're following me on TikTok. Maybe I'll put them here on YouTube Shorts too, but I don't know. But I will be out all next week. No streams. Do have a video on Monday. So make sure you watch the video premiere of that. What's fair? How do you say this group is paying their fair share and this group isn't? Especially when the amount of taxes that this group pays is like 90% of all the taxes or whatever. It's just like ridiculous how much they get taxed. We have a very progressive tax system. It's already progressively, taxed. So it kind of seems to me like it doesn't matter how much you tax the rich. People will always say that they're not paying their fair share. What is fair? How do you who are you to say what's fair and what's not? I think that the entire idea of quote unquote fairness as it pertains to taxes is like completely the wrong approach. I don't give a flying F what's fair. I only care what's effective. I should tweet that. I don't care what's fair. I only care what's effective. Retweet with comment. Who cares what's fair? Who cares what is fair? What is effective? That's my philosophy on this sort of thing. Okay, guys. Well, let's break even this trade here. Okay, cool. We got out of it. Cool. No open positions, even though there's sim. Cool. We only made $15 on that one trade. Yeah, but they're all three winners still. It wasn't actually very good trading. This one wasn't good. These ones in the treasury. This one in the treasury was amazing. That was like one of it's been a long time since I saw one that was like purely kind of a technical sort of setup and just so obvious, but that was a good trade. All right, guys. I'm kind of drawing it out because I don't want to go. I'm going to miss you guys. I hope you stick around. Make sure you're subscribed and click the bell icon and have all your notes so that when we come back, you don't miss us or you don't forget, because it's going to be, and I got to tell you, so let's just review here. I'm going to make sure that you guys are all set for the next week, right? So what do we have next week? We've got ISM services, PMIs. We got some Fed speakers on Tuesday. Wholesale inventory. So next week is a little bit of a light week. So it's probably okay in terms of economic news. It's a good week to take a vacation. And then we'll come back after that and we got CPI on Tuesday the 12th. So now here in the treasuries though, I'm hoping that we see the volatility come down a little bit, and because as of late, they've been super hard to trade, right? All right, guys. I will see you a week from Monday. In the meantime, stay well, unless you're on my TikTok, right? And I'll still be in Discord. In the meantime, stay profitable.